Hello and welcome back to Dukas Copy TV. Now each week on the show we have a collaboration interview with the financial newspaper Agefi. This week Nicolette is back in the studio with Herwig van Hove to discuss the lure of hedge funds. Over to you, Nicolette.
Thank you, Jen. The hedge fund industry has a bright future with institutional investors. To give one example, the California Public Employees Retirement Scheme, CalPERS, has implemented an absolute return strategies program and has increased its hedge fund exposure to help boost returns. The fund-of-fund industry, on the other hand, has consolidated. But Herwig van Hove, responsible for strategy and development, and Notz Stucki, is confident in the soundness of the model. Herwig, thank you for joining us today in the studio.
Thank you for having me. Glad to be back.
The hedge fund sector is very popular with the institutional investors. Can you explain why?
Absolutely. Institutional investors typically are confronted with quite a significant problem of an asset and liability mismatch. They manage money to face liabilities of the future. Due to the crisis of 2000 to 2003, and then again 2007, 2008, the assets are basically no longer covering the liabilities for most funds, for most pension funds, insurance companies, and so on. And institutional investors, after a lot of analysis, have come to the conclusion that hedge funds, in particular, are probably a good avenue to try and make up some of that backdrop that they are facing right now.
So, whilst capital has fled into the hedge funds, the funds of funds, on the other hand, have seen a decrease of inflow. Why is that? Okay,
to answer that question, we need to go back to the crisis of 2008. 2008, a lot of hedge funds underperformed their mandate, which is absolute performance, and lost significant money. They had to side pocket, gate, and so on. The fund-of-fund industry, who invests in these vehicles, therefore also had a bad performance and was faced with redemptions. And the wave of redemptions continued for quite a while. Therefore, the fund-of-fund industry, for a much longer period than the pure hedge fund industry, was managing for liquidity rather than performance. So individual hedge funds, for those who survived the crisis of 2008 and thrived afterwards, they were able to concentrate on performance pretty quickly after having sorted out maybe counterparty issues and others. The fund-of-fund industry, on the other hand, was faced with trying to rebalance their portfolios and making sure that the liquidity didn't mismatch the liquidity they were offering to their clients. So, yes, for quite a while, the industry has faced a tough time. And then there were two other things. Obviously, 2008 and especially the unfortunate incident at the end of 2008, the capacity of managers was put into question in terms of selecting the underlying managers. And also, the model itself, the two layers of fees were being challenged by the clients because there was no outperformance. Now, the good news is that after a long period to get back to performance orientation, we are now in a situation where we see that even the fund of funds are at least delivering stable returns. This year, when markets were very down, by end of April or mid-May, the fund-of-fund industry did quite well and much better than the markets. So we think we are at the very beginning of a good period again for fund-of-funds.
So in spite of the consolidation, you believe that the model is still strong and still viable?
Absolutely. It will take a different shape and a different form. Clients are asking for new things, better liquidity, better fee structure, and so the industry is reinventing itself. There is consolidation because to run a fund of fund today, it has become more complicated and therefore more expensive to do so. So critical size is of utmost importance, and critical size has increased. So the industry, which was flooded with people trying to put together fund of funds, is in a consolidation phase, but I think we will come out of this stronger and better at the end.
Herwig, thank you very much for coming today and sharing your views on this industry, which I believe you know very well.
Thank you.
Well, a big thank you to Nicolette and Herwig van Hove for their interesting insights into the future of hedge funds. Agefi will be back at the same time again next week, but from all of us here in the Dukas Copy TV studio, good night.